The biggest problem in America is not what people don't know. The biggest problem in America is what people think they know that just ain't so. It's wise words of wisdom. That quote is one that I repeat often, one that I live by, and one that all of you should really find the true meaning in. And that's kind of what we're going to talk about today on the Wealth Webinar. We've got a guest, Josh Zigolowski, and Josh is a commercial real estate investor, an avid infinite banking concept user, and also teaches that. But you see, what we're going to talk about today is what this quote just said. And most people right now are living in a world where a lot of things are being thrown at them. This administration, this government is doing all sorts of things that either help you or really hurt you, one of them being inflation. But what Josh discovered is he discovered how you can take back your money from the Biden administration. So how many of you would be interested in learning how you can take back some money from the government? That's what Josh is going to talk about. And I'm going to let Josh tell you a little bit about himself, but he's a family man, married to his wife for over 20 years. Doesn't even look like he could be married for over 20 years. Man, what age did you start? 12, 13? I mean, maybe 14. Has 4 kids. And today is Josh's birthday. So we appreciate you being on. Welcome to the show.
Yeah, thanks for having me. Yeah, it just happened to fall on my birthday when we were talking a couple months ago when you guys said, hey, December 29th is an opening that we want you on the show. Okay, let's do it. It's my birthday. It's fine. Had a good breakfast with the kids, had a good Christmas. And I appreciate everyone coming on, especially during the holidays. Much other things to do. You could go skiing right now. You could, be spending time with your family. So it shows your dedication in yourself of always, trying to be better, trying to learn more. And, just like Chris said, what I can do, Chris, is share my screen. Do I have an ability to do that?
You do.
Okay. And I'll get right into it. So ERC Specialist, that's a company that I've built since April this year. What I like to do is kind of go over what myself is, like what Chris talked about, what my background is. I'm a commercial real estate investor. I've been an investor for 19 years and 7 years in commercial. I primarily buy retail, industrial, flex, and medical office, basically triple net assets, anywhere from about 2 to 13 million. And what I saw this year, being an entrepreneur, is I have another business out in Wyoming. And one of my business partners called me and he said, hey, did you hear that Biden just amended something called the ERC, Employee Retention Credit? Okay, what exactly is that? Well, it's within the CARES Act. ERC started the exact same time as PPP. I'm sure a lot of us on the call right now has heard of PPP, has heard of EIDL, and maybe has heard about ERC. Maybe. And we'll go over what this has been transpired to in the last 8 or 9 months. Okay. So if you Google, so I always try to put myself in your shoes. When someone told me about this, I looked into it and I saw that, okay, this is legitimate. I Googled ERC credit. Okay. After the ads, I went to the irs.gov website. Interesting. Okay. So I'm interested. Tell me more. Oh, well, it's with the Treasury Department. EIDL and PPP was with the SBA. Okay, so it sounds like I need to get a hold of my CPA, my tax person. Probably, it's Treasury, right? So, or the IRS. So I reached out to my CPA and he was like, you know what, I've heard about this because this was just amended in March of 2021. And remember, this is in April when I'm talking to my business partner, then talking to a CPA, my CPA, which he's the same group that does Robert Kiyosaki's taxes, right? He said, hey, there's 280 pages worth of documents. This is something that we don't have the capacity to do. Oh, interesting. Okay. Well, let me call my former CPA, same thing. And then I call a friend of mine who works for KPMG and he says, hey, I know a lot about this, but this is for small businesses. At KPMG, being one of the top 4 accounting firms, we work with people that have over 2,000 employees or more. This is for 500 employees or less. But I'll tell you, Josh, your CPA, your tax professional, they do your 1040s and your 1120s. This is amending your payroll, your 941 quarterly reports. And this is free money. This is up to $26,000 per W-2 employee. This is the last stimulus package within the CARES Act. Yet, don't get mad at your tax person. I always tell people that. Don't get mad at your tax person, because this is so hard to understand, and your tax person doesn't do your payroll. Well, then we should call a payroll company, right? I called ADP, Paychecks, Gusto, QuickBooks. No one could help me. And I was like, wow, this is huge. This is a $400 billion program. And PPP number one was $500 billion. And I don't know if you guys knew this, but during the time of the PPP, SBA was told, hey, get this money out to these people. People are needing their paychecks and all this other stuff. SBA had it for 4 days and they got backlogged. So then they went to the banks and they said, hey, we want to broker this to the regular end user, our business owners nationwide. Because of that, we will give you a 5% commission on every PPP loan that you get out there. That's $500 billion. They put $25 billion to commissions. I don't know if you guys remember that, but in April last year, all of a sudden my banker started calling me nonstop, telling me that they could help me with my PPP loan. Oh, okay. Well, I've been having trouble online. Great. Let's have you do it. Why did they do that? Because they got paid a pretty good commission on it, right? So this now is $400 billion. And as of the end of third quarter, only $18 billion has been used. So, and that's going to come in. Why that's so significant now is because they've amended it again to make it better for us business owners. So the CARES Act, which is also known as the American Rescue Plan Act of 21, the EIDL and PPP, that was under the SBA. The employee retention credit is under the Treasury Department. Now you see tax credit. Oh, this is just a tax credit? No, this is like a tax refund check. And in PPP, you had to disclose what you're using that money for. You had to tell them, like, I'm using it for payroll expenses, all this other stuff. This, you can use it for whatever. Now, why does it say tax credit? Because, and why they call it an employee retention credit and not a grant? Well, in a grant, you have to go through certain rules in order to supply that grant. Why they call it a credit is if a company has back taxes, they're going to keep that money and then they're going to give the difference to the business owner. And you think like, well, that's kind of crappy. No, anyone that we've talked to that have had back taxes, they've already had that pumping on their chest from the IRS for a couple of years or a few years. This wipes it out and they didn't even know about it and they get money. They're excited. Trust me. Now, how much is this credit? This is a W-2 employee based. Okay. So if you're sitting there like, well, I'm 1099, I guess I don't get to benefit from this. You probably know a lot of business owners that you can go and tell this to. I'll tell you that right now, because 9 out of 10 people, and I have CPA firms calling me daily, they're referring their business to us because they're like, we just don't have the capacity to do it. This is up to $26,000 per W-2 employee. Where does that number come into place? Okay, we'll go over that here in a second. And we'll talk about what the cost is and how I qualify. So this goes over, where does that $26,000 come into play? Now, in 2020, they put $5,000 per W-2 employee.
Hey, Josh, not to interrupt, can you make that a little bit bigger? I'm looking at it, just maybe yeah, there you go. Pop that up and maybe make that your main screen, just because we're having a hard time seeing the numbers while we get into this other stuff.
This is good now?
Yeah, or just this page shows so that everybody can see it. It's still a little small.
Do you have another page? Oh,
like how with a PowerPoint, you just.
Oh wait, that's exit full screen.
Yeah, no, don't want to do that.
Okay, I know what you're saying.
Yeah, I think you just go to slide, or I don't know. You're on a Mac. There we go.
Okay.
Oh, much better.
Perfect. So where does that number 26,000 come into place? There's $5,000 available for 2020 and $7,000 per quarter for quarters 1, 2, and 3. So 21,000 total for 21. They amended quarter 4 and they took that out. Okay. Now it's like a tree. And I always like to say what the tree used to be and what it was just amended, where this kind of floodgates opened here recently is in 2020. The first question is, well, number one, always it has to be W-2 employees. But the first question is do you have 100 employees or less? If the answer is yes, then the next question is were you shut down or amended your operation business based on a government mandate, which 99% of businesses were shut down or amended their business with social distancing, whatever it is. If they answer yes to both of those, they get $5,000 per W-2 employee. Now in 2021, I always like to say what it used to be, and this is very important, is it's $500 or 500 employees or less is the first question. The next question used to be, you had to have a 20% decrease in revenue comparing your 19 quarters to your 21 quarters. Now, we were doing really well with that, but we were having people like, oh, I made so much money in 21, I now I don't qualify. Well, now what it now is, and what it's been amended to, is the first question is do you have 500 employees or less? That didn't change. The next question is have you had a supply chain disruption to your business?
Sorry to laugh, but I think that's everybody. You look at the ships out in the harbor there, and they can't even get them in. Everybody's got a supply problem.
I know. And that's where this opened up. And it's because the administration saw, hey, only 5% of this program, and this is a past legislation program, $400 billion and only $18 billion to be used. What's something that we can start getting this money out? Because we've already passed the bill for this.
Josh, just tell them to write me a check. I'll give you my address and just have them to send that balance over to me. I'll make sure I distribute it to everybody on here.
Yeah.
Problem solved. That's what we do here.
What's funny, Chris, is we think of supply. You just said the same thing of what I thought of when I think of supply chain. We think of stuff sitting at the ports. Well, it's everything that's changing your business. Like, meaning I've had attorney firms say, you know what, through the pandemic, courtrooms, like courthouses, they're shut down all the time. And I'm always getting delayed. That's my supply. My supply is courtrooms. And so with that, I should go get this money. And believe me, they've applied for it and they've got approved for it. So like we think of a widget, right? Sitting on a barge at the port. It's not necessarily that. It's like one of our, if you go to our website, you'll see the About Us. One of our consultants with our company, she was with the IRS for 25 years. Now she's with an attorney firm. She's not an attorney, but she's an expert witness with the IRS. The IRS still hires her for forensic accounting. Now, she's even told us is she compares it to this. When we were kids, we would go to the dentist's office, and when we were in the lobby, we'd open up a magazine, and the magazine had this little game we'd play. On the left, it would be an actual picture. On the right would be that same picture, but 10 things were changed. The guy was missing a shoe, or he's missing an ear, and we'd have to circle those 10 things. She compared 2019 is like that picture on the left. Picture on the right, what has changed in your business through the pandemic? Even if you've made more money, what has changed? And if you dissect those items, that's probably supply chain running down the ladder. It not necessarily happens like, oh, well, I've had my products, but some things have been delayed, in essence, right? So that's where that kind of comes into play. And that's where this has gotten so big. Us as a company just did under 180 million in credit this month, and we're not even scratching the surface. Now, the slide before, what's the cost? How do I qualify? The cost is, we saw a couple bottlenecks in the very beginning of starting this business. Number one is the worst thing with this program is this does take 4 to 6 months for the IRS backlog to send the check. Okay. So we saw, hey, we can't charge people up front because they're going to be sitting there like, oh, I just did this with these guys, and man, I've already been waiting for 3 or 4 months. That cost me, $10,000, $20,000, $30,000. And I know I'm going to get $400,000 back, but this is not feeling good. So we said, you know what? We're not going to do that. We're actually going to invest our money as a business owners. There's going to be no cost up front. So someone can do this with no obligation. We are going to get paid on a percentage of the credit when they receive the money. So that number is 15%. So if someone gets approved, the average company gets approval about $350,000. they're not going to pay us until they get paid. So if someone says, well, what's the money back guarantee? If you don't get money, we don't get money. That makes us work harder to get you more credit available. We even have companies that have already done this 3 or 4 months ago. And we say, hey, you might want to redo this because this supply chain, you might be able to get more money. Before we were doing it based on your revenue piece. Now we can get you some more money, right? Some other people might say, well, I thought this expired. It did. This expired September 30th this year, the end of quarter 3. Remember I said quarter 4 is not available, but we can amend someone's 941s for 3 years.
Oh, wow.
So this is a 2 to 3 year runway.
Now, what if the CPA, so amending that would mean going back to the CPA or the tax preparer that did that? I mean, if they don't understand this, are you the liaison to help them understand what's being done and why? And, are they going to be willing to do that, do you think?
Yeah, absolutely. And that's what's funny when you hit right on the button of what I used to think too. I used to think like, oh, well, we all trust our tax professional. And that's kind of the biggest thing with this whole thing is, number one, getting over the hump of this is too good to be true. That's number one, right? Number two is like talking to them about like how the program works. And we have the right people. It's kind of like the book Who Not How. Is I found the right who's around me. I'm not a tax guy. I've saved a lot of money in taxes, commercial real estate. I do depreciation all the time, but I had to get the right people in place. And one of my partners used to be the director over the state of Utah's payroll department. And so we've expanded it from there. Now, I used to think like, oh, when they go back to their tax person might just say, hey, I'll just go ahead and do this for you. No, the reason why that, I've talked to, again, 40, 50 CPA firms and other tax companies and payroll companies even. And they just say, this takes a regular operation 2 to 3 hours per employee to file. So let's say a CPA has 100 clients and one client has 20 employees. That's going to be 40 to 60 hours of work for that one company. And they don't have the bandwidth to work on the other 99 companies. We have systematized this to make it so we can now take in 150, 200 companies a day is what we're seeing, right? And so we've systematized this. And I always say, you know what? We're not trying to take any tax business at all. And we're not going to. Your CPA is still your CPA that works on your 1040s and your 1120s. We're not even trying to take your payroll business. It's kind of like, and you probably go through this, Chris, is, I tell people all the time is I have a couple CPAs. I have my regular CPA that does my income tax. I have a tax cost segregation CPA that works with my tax. It's kind of like if you're going through a divorce, you don't call a real estate attorney, right? You call a divorce attorney. And so we're kind of that specialty piece that's helping people get this credit through doing all their filing for their taxes and even working with their payroll companies and their CPA. Now on the screen, what you're seeing is kind of what we talked about is that little tree. Now on the top, I always put up here, 501As, 501Cs, nonprofit can still get approved for this. Even Indian tribes, there's a whole gamut of people. It's not just the regular, plumber, electrician, like service company. Almost every industry is now with this supply chain. And we talked about what can you use the money for? Anything. You can give back money to the shareholders, dividends. You can, I just met with a pizza joint on a commercial property last week. And when I told him about this, because we've never met before, he was like, oh my gosh, really? I have 40 employees. This could help me open 2 more stores up. That was his attitude. He's already looking to invest the money. Granted, it would take him 4 to 6 months, but he was like, oh my gosh, let's get this done. He goes, I actually looked at this 2-3 months ago, but I'm more looked at it on the revenue piece. With this supply chain, dude, my pizza place, flour, everything is getting delayed. He goes, I have to go pay premium dollars for other stuff because my regular stuff is, backlogged. So you can use it for anything. Now, we talked about this a couple of times. Why has my CPA told me about this? I would say, don't get mad at that person. It's so hard to understand. Like, and I can't say the name of the company. I can say the name of their group. Well, vice versa. There's a group we just helped that they're one of the biggest franchise owners of Crumble cookies. If you guys have heard of Crumble cookies, 60 companies, or 60 entities, I should say, over 950 employees. So you think like, well, Josh, you said this is only for under 500 per entity. So because of the 60 different companies, they were able to qualify. We were able to get every little one because every single one was under that threshold. Granted, it was 950 total. Now you think like they have a big company, and we're going to help them get $15 to $20 million in this money. And you think like, why wouldn't they just do this themselves? When I sat down with them, that was my question. Why haven't you guys thought about doing this themselves? You know, Josh, this is what I'll tell you, because I was trying to find what is people's pain point. And he says, when PPP started, when I did almost 40 companies back then, that took me 6 weeks. And he goes, and that's when the government was shut down. I had nothing else to do. And I was doing that all day long. This would take me 4 or 5 months. And for you guys to do it in a couple of weeks, that's totally worth it to us. And granted, I mean, you think about that, if we end up getting them 20 million, that's $3 million that we'll be billing them. And they're totally okay with that. You know,
yeah, because they just got $20 million of, I don't want to call it found money, but it's kind of found money that they wouldn't have got otherwise. So what the hell does it matter if they got to write you a check out of that 20 million for, you know, whatever it is, 15%. I mean, I don't think there's a business out there that would care about that because they don't have the time to do it, the resources to do it. This is what you specialize in. So I don't know. I mean, I'd be all about it.
Yeah. I mean, like you and I have talked about this before, Chris, is time is money. You know, do they want to go get 5 or 6 more people on a staff to save that much money over a 5-month period? No. You know, they took a 5-person staff to do 6 weeks, just the PPP, and PPP is easier, right? This would take them a long time. So that's always the first thing is this is just a big, can your CPA or payroll company do it? They can, but it's kind of like, it's going to take them a long time. And that's why they don't. Plus, a lot of them don't know the new amendments. I mean, we're on top of this daily on the new amendments. And I talk to CPA firms, they don't know about the supply chain. And when they do, they're like, oh, well, I probably can do this, but man, I'm already backlogged. And now tax season's coming in the first quarter this year. You know, I met with a CPA yesterday on the phone, and she was telling me, hey, can you help me put a newsletter together? Because I'm going to have a lot of clients come in my office over the next quarter. I'd rather have them know that I can help them with this by referring it to you guys, you know? So we talk about who's your advocate. Well, you know, we are ERC specialists. We specialize in helping businesses claim this ERC tax credit. It was created by business owners for business owners. Right now, we have over 75 processors and growing. We have some really big negotiation on some really big fintech companies that did over 200,000 to 300,000 PPP loans that they loved our automated process that we've created. We ensure that you get the most credit possible while staying within the law. This is no gray area, guys. It's black or white. You're going to be approved or not approved. And we don't try to find a way to make sure you get the money. This is old reports that you've already sent the IRS. That's why you can't. There's a 0.5% chance of any fraud here because this is stuff you've already sent to the IRS. They're going to double check to make sure you send over the same documents that you gave to us that we're going to give to them. Okay. We help you qualify through our understanding of the program. We have experts in the law on our team. What we charge, other companies are charging almost 1/3 of the credit. We came up with a 15% number. We don't charge anything up front. We are incentivized to get you the most money possible, and to where if you don't get paid, we don't get paid. What is the audit risk? Sometimes people always bring that up. Well, what if I get audited? Well, we give you the full packet for an audit protection. Now, payroll companies don't get audited. However, in this program, when they amended the supply chain, they did amend something else. If someone gets more than $2 million of credit in their business, we need proof on the supply chain. What's the proof? 3 different emails or more and a 1/2-page summary from the business owner, signed by the business owner as proof that there's a supply chain. Okay. Now, what about 2 million or less? They have to attest that they've had a supply chain. Again, attest. Okay. So that's kind of the audit pieces. Now, we do supply the full audit packet to every business for that, just in case, but that's exactly what the piece says. Now, these are documents that you gave us and we're going to give to them. Chances of an audit is very, very slim. But if it's over 2 million, that definitely, requires an audit. And so we have a whole team in place, because that just happened 2 months ago, that we actually get, before we file it, we get a hold of the business owner, we do a conference call with their CFO and all that stuff to make sure we can provide substantiated evidence to the IRS for that, just so you know. Our director of fulfillment, I talked about her a little bit. She's one of my partners, certified payroll professional with the American Payroll Institute, active member of the American Payroll Association, and currently sits on the board of the Utah APA, which is the American Payroll Association chapter. What is needed from the business owner? 3 things. 941s, that's that tax, IRS tax form on the quarterly reports. And that's basically quarters 2, 3, and 4 in 2020, and 1, 2, and 3 in 2021. These, just so you know, these 3 items, when someone goes through our website, it takes them maybe 5 or 10 minutes to go through the questions, and then we'll tell them what documents we need. So you don't have to write this down. You can, but when it goes through, we have everything automated. So we're going to tell you which documents to upload on a secure Dropbox file folder. Payroll summary reports, there's a certain date range from your QuickBooks or whatever, or if you use a payroll company, we tell you what to request from them. You'll upload those. And then basic PPP info. If you got the first wave, the second wave, or both, we'll need to get that to verify the employees that you put in that PPP loan. What's the time frame? We talked about that, 4 to 6 months. We know in January, there's 3 hubs within the IRS nationwide that are going to add 30 employees per hub. We're hoping that comes down to a 3 to 4 month period. They always use the word weeks, so that's where the 16 weeks is the very minimum, which is that 4-month period. Website, so ercspecialists.com. I always like to know where the marketing comes from. So, there's a place that says refer. I always like to know, and so put, Chris Naugle in that referral box, please. That way I can know on my side where all our marketing efforts have gone to. We're not doing any type of marketing here. Chris knows. It's just on our side, we just kind of know where things are at, and I think that was it. So if you have any questions with it, you had my number at the very beginning. I'll put that back on, but here's our website, ERC Specialist. If you have questions just with our support team, support at ERC Specialist. I'll put my phone number back up here. And let's maybe start some questions or something.
Yeah, so we got a bunch of questions here, and I'll go right back up to the top. So Cindy was asking, what if you purchased a business during COVID?
Good question. So there's a new business credit. Actually, I'm going to share my screen again. So right here. So I get that question often, like, oh, well, I don't qualify because part of PPP, you had to have a business before, I think, March of 2020, right? Well, look down here. So there's a recovery startup business credit. If you started a business after February 15th, 2020, you can qualify up to $50,000 per quarter for quarters 3 and 4 of this year. Wait, Josh, you said quarter 4 was eliminated. It is based on the stuff up here. This is the new business recovery. You can get up to 100 grand. And then basically one of the main stipulations is you can't make, sorry, I'm wording that wrong. Your business can't have a year-to-date revenue over $1 million. That's basically the main qualifier. If it's below that, kind of a startup business, you can get up to 50 grand for quarters 3 and then quarter 4. Good example. And, I don't have my permission from my partners, but oh well. Just kidding. You ERC specialists. This is a new business. I started it in May this year, right? We applied for that. We got $36,000 for quarter 3. And when you do it based on that right after the quarter, we've already received that money. That's not a 4 to 6 month wait. Why is there a 4 to 6 month wait? That's for amended returns, right? This is active. So if you're coming up on, the end of quarter 4 is in 3 days, you should hurry and, get this situated with us, because you might be able to get your money within 60 days after the end of the quarter. So great question.
Great. All right. Next one. Theodore said, can this be used with S Election LLC, single manager, no other employees?
So I didn't hear the first part. I think I know the question though.
Yeah. So basically he's got an S Election LLC. So he's just got an S Corp or an S, an LLC, but he's using an S Corp election. And then it's a single manager, meaning he doesn't have any employees. So if it's just him, he's a sole operator, but it is an LLC.
Okay. Doesn't matter the entity, number one.
Okay.
Number two is there is a qualifier if someone is, and number 2 is the W-2. So if he's 1099, every 1099 is not.
So he would have to receive a salary, a W-2 salary.
He does. And I have some people that do. The next thing is, one of the things they have is you can't be 51% owner or more. If you're 50-50 with your spouse or something, and that could qualify. Right? It's the 51% that doesn't. So when someone tells me like, oh, I got 3 employees, my first thought is like, well, what percentage owner are you? I'm 100%. Well, you're not gonna be able to qualify yourself, but the other 2 employees you can't. So it doesn't eliminate your whole business. It just eliminates that one person.
Okay. All right. And then Wes asked, I'm 1099, but was blocked entry to vendor sites because of COVID. This, like attorneys, affected my supply chain. Can I apply for this as a 1099? I think you said you have to be W-2, right?
Unfortunately, no. Yeah.
Yeah. So Wes, unfortunately, that would be a no. Jade said, go ahead.
Someone might say, well, what if I hurry and change it over now? It's technically this program expired the end of quarter 3. So that would already have been filed.
Okay. So Jade said, if a decrease in 2021 revenue for a quarter is not more than 20% of 2019 or previous quarter, then do we not qualify?
So going back to that tree. So that 500 employees is the first question. Do you have under 500? The next question is, have you had a supply chain disruption? Then if the answer is no, which it could be, but 90% of companies, maybe 80% are having supply chain disruption.
She had a supply chain disruption. I know this client.
And if the answer is yes, the 20% revenue is not the next question. That's it. Now, if the answer is no, then the 20% revenue question comes into play.
Ah, I see. So it's either or. So you can use any one of those qualifiers.
Right.
Okay. Hopefully that helps, Jade. Claudia was asking, I have a pass-through C Corp. I'm a realtor, self-employed, and my husband is the other person in the company. Does it qualify? I guess that would just come down to W-2 again, right?
W-2, and then the percentage of ownership.
Yeah, because somebody's self-employed doesn't mean they don't receive a W-2. I mean, if you take a salary from your company, which we always tell you, if you have a company, pay yourself. I mean, pay yourself with a paycheck for reasons like this, then you qualify for stuff like this.
Yep.
Next question was from the same one that was asking about the 20%. Is gross receipts based on cash collected or the revenue method used on our tax return? Good question.
Revenue.
Okay. So actually that would probably be a higher number too, right? Or
yeah, and the thing is that's what we do on our side. And here's a couple good, well, I'll just tell one story. Before we had the supply chain disruption, I had a friend of mine that he owns a business. It's a cell phone accessory business in a lot of the different malls around here and in Hawaii and Idaho. And he was like, hey, my CPA looked at this and I've made so much money in 2021. And I at least convinced him, hey, why don't you just get your CFO on the phone? Because he's got 80 employees. I said, just we don't get paid unless we can find the credit. So let us, spend the couple days, we'll go through things and we'll comb through it. And then we'll tell you whether you qualify or not. So he's like, okay, well, let's get my CFO on the phone. We did a conference call and her name's Alyssa. Alyssa was like, okay, I'll upload everything today. And then you guys just get back to me. Well, come to find out, And again, this is before the supply chain. This was just the 20% qualifier. We end up getting them $420,000 for quarter 2 this year, not quarter 1 and quarter 3, because they made too much money in those quarters comparing to their 19. But they're like, oh my gosh, I can't believe we're sitting on this and we didn't even know, right? Then the supply chain hit and we were able to get them even more money for quarter 1 and quarter 3.
Right.
So definitely, I always say we get paid, based on if we find your credit. So you have no obligation to, and it might take you 30 minutes to upload everything. 30 minutes is worth the peace of mind if you don't qualify. Meaning spend 30 minutes to see if you don't qualify. To have the peace of mind that someone that specializes in this can go do this for you.
Yeah. So let's continue on with the questions. We got Chris Ash asked, does this apply if you're classified as self-employed or doing business through a corporate entity like an LLC?
Oh, I just want to say, based on what you said there, because I'm not seeing the questions for some reason, is it starts with a W-2. It doesn't matter what the entity is, because like I said, 501As, 501Cs, nonprofit. So it doesn't matter if it's an LLC, S Corp, C Corp. If it's straight just W-2, that's where we start.
Okay. Hopefully, Chris, if you want to ask that a different way, but it all starts with the W-2. So hopefully that helps you. Jade said, what if we already claimed credit using cash collected and qualified, and now we are being told it is based on tax revenue method, or do not qualify? So sounds like they've already, she's already done this, but I mean, Josh, when you're looking at these, they should be right on yours. Just click the Q&A. That's what we're going through. But, what if we already claimed the credit using cash collected and qualified, and now we're being told it is based on our tax revenue method and we do not qualify?
I can see it now.
Okay. It's a kind of a two-parter.
Yeah, I mean, I would go with, you're talking about the tax revenue method. I mean, is this the one that you said that most likely had a supply chain disruption?
Yeah. Oh, for sure.
That's where I would start. I mean, granted, we're going to get your documents and verify some things, but outside of that, that's where I would start with this, Jade, is the supply chain disruption.
Carolyn was asking, are you looking for more processors? We had a bunch of people asking if they can help you get out to more people and help more business owners with this. So I don't know how that works. I mean, like an affiliate program or something that you could do for people?
Yeah, we do have an affiliate program. What I would do is just text me, and then I'll put my number in the chat one more time. Just text me, and then I can kind of send that off to you. Everything is automated on that side too. And it's easy to talk about it, especially that so many businesses don't know about this. I mean, I'm not kidding. 9 out of 10, and that's what makes, what I do here fun, is because you're helping people get, I mean, I don't want to use the word free, but money they didn't know about, that they can use. And the whole purpose why, President Biden made this and amended this was to reward business owners for retaining employees through COVID. So yeah, just text me, and I'll get back to you probably the next 24 hours, being that it's my birthday.
All right. So Wes said, if I created a Nevada LLC, is that considered a new business, and can I use the recovery startup request for that? If the business, I could answer that one, Wes. If the business isn't already established, then probably not, because it already ended.
Yeah, it just matters if you started after this end of this in this quarter 4, then no. But if it was before and it was after February 15th and it's W-2 employees, then yes, you definitely have a chance.
Okay. Then Jade was saying, this kind of just follow up. Hawaii is a stay-home mandate, but construction was considered essential, and she's in the construction world, and we continue to work, but not at a normal level. Does that qualify?
You're going to qualify, Jade.
Yeah, for sure.
You got my cell phone, Jade. Hit me up, and we can go through this on a one-on-one for sure.
And then Unanimous said, if we refer business to you, would it be a referral fee? I think that would be the affiliate program.
Yep, I'll go through that with you.
Okay. Do you think these sorts of programs will continue into 2022 if COVID does, or is this program over?
What's funny that I thought about that about 3 or 4 months ago. The reason why I was thinking about that 3 or 4 months ago was, the new Delta variant, the what is it, the Omicron. I don't even know the name of it, but when these started coming out, I was like, man, this might not end. But then when they cut out Q4 and they added the supply chain, I don't think it's going to continue. I really do think this is the absolute last stimulus of the CARES Act.
Here's a kind of question that came in that I'm curious about. And Cindy asked this, but let's say you take this credit, right? And I don't know, let's say you get 100 grand and you qualify and all that good stuff. But then you sell your business, I don't know, July of 2022. Is there a recapture? Like, how does that work? Does it bind you to anything?
So it matters how the sell was. It's got to be very specific. In other words, I sold a hotel in Boulder City, Nevada, that I've had for 4 years, early this year. So I could only use the credit up until the day I sold the business. Technically, I sold the business because I had employees and the new owner took it over, right? If I would have just sold the LLC to him and the corporation, he would have been able to take advantage of it, right? Not me. So because there were two, entities that, sold, we were able to get the credit. And then he was able to get the credit the day, when he bought it. But if I just sold the corporation to him, he would have been able to take advantage of that based on the bylaws on what would have been set forth on that.
Interesting. All right. How would you prove a supply chain disruption?
Yeah. So I mentioned if it's under 2 million of credit, it has to be an attestment. If more than 2 million, we need at least 3 emails from your supplier showing that there's delays or whatever. And we have a team that works with you on that. The other part is a half a page letter signed by the business owner saying that there was a disruption and this is what it was.
And the anonymous said his company received the first PPP, but the business ended up closing up, didn't get the second PPP. Can the ERC work for a closed business due to the effects of the pandemic?
So this is all based on your quarter. So if the business was open in 2020, there's up to $5,000 available. If the business ended in the middle of Q1 of 2021, you'll be able to get a little bit of credit for Q1, but definitely not Q2 and Q3, right? So this is based on when you had the business.
Absolutely. That's awesome. So it's all retroactive. So think of it as looking in the rearview mirror with this, folks.
Yeah.
Do I call you tomorrow since it's your birthday?
Text me and we'll get it scheduled, Jay.
There you go. Start with the text. Claudia said, do you have a flyer that we can use to send to our clients?
We have everything.
Yeah. Claudia is definitely someone you want to be working with for this. Josh, thank you so much for coming on the show today.
Yeah, thanks, guys. Have a good one, and hope you have a good new year and you start hitting 2022 hard.
All right, if you like that video, make sure you check out this video right now. And also, don't forget, subscribe to my channel, and don't ever forget to smash that alert button. We'll see you on the next one.